This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Just briefly, I want to let you know, I created the video on Friday because I had a really busy week coming, Monday, Tuesday, Wednesday. So as you're seeing this on Tuesday, I want you to it's a few days old. It's still very relevant. And I do mention this later in the video, but I think just from the beginning, it'll make more sense to you just to know that the market has rallied a little bit, but since I did this, all right? Hi, this is Joe Rabil with Invest Like a Pro. So today what I want to do is I want to address the short side. I've gotten a number of questions from different people about this because the market is in a bear trend, especially on the weekly chart and the daily chart. The monthly is it's sort of flattish. It's not, an overwhelmingly bearish trend at this point. But in terms of the bias, especially if you have any sort of like a trading mentality, the short side has been the way to go, I guess. But I do want to address a few things. Number one, most of you know that I have been providing consulting and research to institutions for the past 30 years, but a lot of you might not know that I managed a hedge fund from 1999 until 2005 when I started my research company. And it was the type of situation, the way it was set up is that we only got paid over and above how we did versus the S&P. So in 99, the market was up 40%. If we were up 40%, we wouldn't have made any money because we would have just matched the market. We had to make whatever we made above the market is what we got paid on. So we were actually up like 90% in 1999. And then in 2000, the market turned down and we had a topping pattern. Pretty ferocious, and the market ended up being down. I don't know the exact details. I think the market was down about 5 to 10%, and we were up about 5 to 10%. And that was an incredibly difficult environment, incredibly difficult. And the reason why I'm bringing that up right now is because we were doing a lot of shorting, and it's just not the same as the long side. And if you think you can just flip over the chart, treat these exactly like you would a long trade and play them the same way, you're going to have a very difficult time. So I know one of my paid subscribers on Rabil Stock Research has asked me a couple of questions about this, and I'm going to address it on that side as well. But I figured in the public forum I would at least give you an idea of why I don't generally talk about the short side with the average guy out there. And the reason is that it's so much more work. Most of the people that are on this channel have another job. They're not a professional trader. And I think you'd almost have to be a professional trader to make money on the short side. It doesn't mean you can't do it. And in certain circumstances, you can go through periods for maybe a month or two where the trend is so overwhelmingly bearish that you can just take those trades. And yes, you do make money faster on the short side. It's a lot of fun when they're working in your favor. The problem is that it's mostly a group of people that are traders. So you have to have a slightly different mentality when it comes to doing short trades. So I just wanted to lay this out as sort of the backdrop, and let's just go and look at some charts. So Friday I do an update on the market, and I use the spider as the chart of choice, okay? Because it is a tradable instrument, and when it comes to that specific instrument, I don't think we've had a very good short setup. The best one was here off the top. All these others have been, I don't think, like if you look at this rally and you look at this rally and you look at this rally, I don't think they've been all that great a setup, frankly, on the spider. Now, that doesn't mean that you couldn't go down to an individual stock basis and find individual stocks that look more attractive. But I'm doing analysis on this market when I do the Friday update. I'm not really saying, it's not really here to provide you a bunch of ideas. I mean, this is more of an educational forum. And the idea that I'm going to talk about today is not a recommendation. I mean, I just want to make sure I'm clear on that. But I do think it's set up better than what the spider is. So I did want to address the fact that I haven't really talked about the short side on these moves. Now, I do, if you look at the short-term trades that I do both longs and shorts. And I have plenty of videos on the short side if you go back through the last year or two. But just in recent action, I mean, if we look at what's going on, this is a monster green bar off the low. I don't really like to short into a big green bar like that, especially as long as it's above the midpoint. And you can see we've created a little bit of a support level here. It's just a tough trade, I think. It doesn't mean that the market can't collapse here. It's just saying for me, it's not a great short trade setup, even though we have reverse divergence in place. Okay, even though we have a pattern here where we've broken the trend line, we've tested the high, and then we've come down back through the low on the hourly. So we have a 1, 2, 3 on this time frame. We have reverse divergence on this time frame, and yet I haven't even brought it up. Okay, I haven't even brought it up as a potential trade to the downside, and I'm going to change that. I'm going to try and make it a little bit more balanced for guys, just because I have gotten requests for it. But the bottom line is that I look at the overall market condition. I look at the monthly, I look at the weekly, I look at the momentum conditions, I look at the sentiment, I look at price support, I look at how extended we are, just stuff like that. And I really don't like the short trade right now. Now, I mean, the market could just plummet from here. I mean, it could just go down. It really could. But is it really a trade that I would put my hard-earned money on to play to the downside for a longer trade? I'm not talking about intraday. I'm talking about like I want to get short this for a big move. I wouldn't do it. I mean, we're too far from the 18-week. So now if we rally up towards the 18-week in a way that's not ferocious, I mean, this is just brutal. These rallies have been ferocious. Now, this rally wasn't all that great, but it was doing it above the 18 on the weekly. So it made this short trade a much more difficult proposition. And then even if you wanted to do it, it had a monster gap down on the trigger bar. So, and it did the same thing here. I mean, this has not been an easy environment to try and short trade. So I wanted to point this out. I don't want to ignore any side of the market. And I do recognize this is a crappy market. It's probably more money being made on the short side potentially. But when the sentiment gets really bearish, keep in mind, when we were down here, the sentiment was really big bearish. And now in the last 3 to 4 weeks, it's been very, very bearish. Not really an environment that I want to be shorting a whole bunch of stocks on. Now, if you can get a setup like this in the market and then go to the individual stocks, because let's just look at the reason why. Look at this gap up. You see the gap up? I mean, it's just not been a great environment. But this is what I say over and over again. In a bear market, the volatility goes up, the gaps go up, and most people like to swing trade shorts. They're not usually getting in and looking for a monster move to the downside. And it's very difficult environment to trade. Trust me, in 2000, 2001, 2002, into the bear market bottom, into the turn in 2003, I did it, and it was so much work. So much work. It was not fun. It was, and I do this for a living. I mean, hopefully you guys can tell I love this stuff, but that was not enjoyable. So I wouldn't encourage people to do that. If you're a professional and you need to do that, then that's a different story. And in that case, that's why I'm doing this video. So let's look at ON. Now, again, this isn't a recommendation, but I want to tell you all the reasons why I would do this over doing the spider. All right, if I was going to do a trade. Now, I've only got 10 days to trade this because 10 days of earnings, I am not going to be short going into the earnings number in this, especially swing trading. I just wouldn't do it. I don't do swing trades where the risk on an overnight gap is on average is like 5%. It just would, you can't control the risk in that situation. So make sure any stock you're looking at has doesn't have earnings coming. So this one has earnings coming in the next 10 days. Okay, so now we know that. Now, I did a video on why this was a deep pullback, and I didn't necessarily want to play this to the long side. I think that was a few months back. As this was pulling back, and it did try and make an attempt, but then it failed. And it doesn't surprise me because this was just too deep of a pullback, and it didn't show a lot of strength on the green DI, the ADX did not get above 25. Hopefully you remember that. And and anyway, so now we've kind of broken through support a little bit. We're below the 18. And if you think about it, we had price support here, and now the next price support is down here. So I'd be saying somewhere around $50 is price support potentially. Now, I have a problem with this trade, and that is that the 18-month is at 55. So if I'm going to do this trade, I know my target area is really here, and it's around 61, 62. I have to use the hourly to make sense. I have to do an hourly entry and exit to get in and out so that I make at least 2 to 1, meaning my reward is twice the size of what I'm risking. All right. Now, one of the things that I would tell you is that let's say we have a situation where there's like we're in a downtrend on the monthly and there's a lot of room. You have a boatload of room and you want to play it for more of a trending play rather than a quick trade. If that's the case, what I would recommend, and I take these targets at 1 to 1, 2 to 1, 3 to 1, and all that. What I would do is I normally say on the long side, I normally say take a quarter at 1 to 1. What I would do is take either a third or a half at 1 to 1 on the short side. Okay, like if I get this trade and I'm putting it on at 1 to 1, I probably want to do, something. I want to book a profit, maybe take a third. If it's a swing trade, I know I'm only trying to get 55 out of, I might only take a third of that gain. If it's a bigger trade and I'm looking for a bigger move, I might go ahead and just take half and then go to a break even and then see if I can't make more money on the second half of that. I know that on the first half I've made a decent little a crumb that I can add to the bottom line. But if something happens where the market comes down and we get a gap up in the market or whatever, you want to just sort of be able to take advantage. Short guys who are short are very, very nervous and they're very quick to pull the trigger. So short covering causes big moves against you. You have to be a little bit more nimble. So, but if we look at this setup, so I know I've got price support a little bit lower. I've got the 18-month down here, but we can see we've lost some momentum. The MACD is turning down. It kind of looks like it wants to pull back a little bit more. Now we get this really weak rally, and notice how the red DI is broken out again. As this is rallying back up, it's still hanging in around the 25 level. So now the question becomes, does this trigger? So let's just go to the hourly chart. Oops. Let's go to the hourly chart. Click on that. And what I like about what's going on this trade is that there's no real strength in the buy side. So we got the strength on the downside based on the red, and now we've worked our way up and we have no sign of real strength here. Now we have overrun. So my rule of thumb is I'm not going to take the trend line break. I'm going to make this break and make a lower high. And hopefully what I can do is create an entry, maybe off a pinch or some kind of a lower pivot high where I can get in here and risk to here, and I have room to 55 where it's 2 to 1. So that's what I'm going to try and do if I'm looking at a short trade right now. I don't know that I'd really be looking for shorts right now, frankly. As I do this right now, I mean, just to give you an idea, the S&P was down this morning. I'm doing this on Friday for Tuesday, and the market was down and now it's up today. When you go back and look at the S&P, I just don't think it's a great short setup. But I wanted to address this because I want you to understand, I treat these patterns identical. The long trade versus the short trade, it's the same entry, the same kind of strategy. If we get overrun, I'm still looking for a little bit more evidence. The only difference is the way I manage the trade. When I'm managing the trade, I want to make sure that I am taking profits more quickly. I'm not looking for a kill. If I put on a long trade, and my hope is that I'm going to be in that for the next 6 months, a year, 2 years if I can. If it doesn't stop me out, that's great. I have no intention of doing that on the short side. And I know the likelihood of that happening is so small. Now, I've gotten responses from my paid subscribers on some of the short sale. I do put Monday on my Monday report. I put out short sale ideas, basically negative ideas where you're using them. You have to know the timing, but you can use them to find short ideas. And I've had some guys let me know that they've made some pretty good money using actually puts, which might not be a bad strategy here rather than playing actual stock. So those are all different ways that you could think about it. And the reason why the options are good is if you know how to control the risk. Like if you don't put up too much in the option, you're controlling the risk by default. If you put up a big amount of money in an option, then you're taking on a lot of risk. But if you don't put up, I like to put up the amount of money that I would use as a risk point in my stock. So if I were going to risk a couple $100 in a trade, then I'd put a couple $100 in the option. That way you're totally limited. And if you get a move in your favor, you can kind of take advantage of it. So those are a couple of items to ideas, I think, but we're waiting for the same strategy. We want a lower high here because we got overrun. Now, if this just ran up to the zero line, then we would want to take the trade as it breaks the trend line. It's the same strategy. I would just tell you as you get in these, know what your targets are, be a little bit more aggressive at taking profits. Look, if the market's going down and you're making money, it's a good thing, right? I mean, we don't have to make a killing. If we're making little crumbs and adding to the bottom line when the market is going down, you're way, way ahead of, I would say, 99% of the people out there. All right. So anyway, go ahead and post any questions or comments, and we'll see you next time.